The unexpected Bitcoin bull run. What do you need to know now? Welcome again to CryptoDava. The recent unexpected Bitcoin bull run has taken everyone by surprise, breaking records and defying even the wildest expectations of investors. In this video, we'll explore the factors behind this surge and how you can maximize your gains by understanding the intricacies of blockchain technology, mining, and investment strategies. So, if you're ready to seize the day and ride the wave of the unexpected Bitcoin bull run, this video is for you. Join us as we explore everything you need to know to make the most of this exciting opportunity. What is Bitcoin? Bitcoin is a digital currency that operates independently of a central bank. It was created in 2009 by an unknown individual or group using the pseudonym Satoshi Nakamoto. Transactions made by Bitcoin are recorded on a decentralized ledger called the blockchain, ensuring each transaction's transparency and security. One of the unique features of Bitcoin is that it's not regulated or controlled by any government or financial institution, making it a decentralized form of currency. The value of Bitcoin can be volatile, with its price fluctuating based on supply and demand in the market. Despite this volatility, Bitcoin has gained widespread popularity and is used by individuals and businesses worldwide for various purposes. How it was created. History. Bitcoin was created in 2009 by an unknown individual or group using Satoshi Nakamoto's pseudonym. The idea of a decentralized digital currency had been discussed for years prior, but it was only in the publication of Nakamoto's paper that the concept was realized. The goal was to create a system that could transfer value between individuals without intermediaries such as banks or government institutions. The early days of Bitcoin were characterized by experimentation and growth, with a small community of enthusiasts working to develop the technology and promote its use. In 2010, the first real-world Bitcoin transaction was made when someone bought 2 pizzas for 10,000 BTC, worth millions of dollars today. Since then, Bitcoin has grown in popularity and became a mainstream form of currency and investment, with a market capitalization of over $1 trillion as of 2021. Its creation and history are a testament to the power of innovation and the potential for new technologies to revolutionize how we think about money and value exchange. How does it work? Blockchain technology. Blockchain technology is the revolutionary concept that powers Bitcoin and other cryptocurrencies. A blockchain is a decentralized digital ledger of transactions managed by a computer network rather than a central authority. When a transaction is made using Bitcoin, it is broadcasted to the network of computers known as nodes, which verify the transaction's validity using complex mathematical algorithms. Once the transaction is verified, it is recorded on a block, which is added to the chain of blocks that make up the blockchain. This process ensures that each transaction is transparent, immutable, and cannot be altered without the network's consensus. The potential uses of blockchain technology go far beyond just cryptocurrencies, with applications in fields such as supply chain management, voting systems, and more. The decentralized nature of blockchain technology ensures that it is secure, transparent, and open to anyone with an internet connection. What is proof of work? Proof of work, POW, is a consensus mechanism used by many blockchain-based cryptocurrencies, including Bitcoin. It is a process that requires computational work to verify transactions and add new blocks to the blockchain. In a POW system, nodes on the network compete to solve complex mathematical puzzles to validate transactions and create new blocks. The first node to solve the puzzle is rewarded with new cryptocurrency coins as an incentive for their work. This process ensures that the blockchain is secure, transparent, and tamper-proof, as it is extremely difficult to alter or manipulate the records on the blockchain once they have been added. While POW has effectively secured the Bitcoin network, it has been criticized for its high energy consumption. The computational work required to solve the mathematical puzzles is extremely resource-intensive and requires significant electricity. As a result, many new cryptocurrencies are exploring alternative consensus mechanisms such as proof of stake that are more energy efficient. Nevertheless, POW remains an important part of the history and development of blockchain technology, and its impact on the digital economy cannot be overstated. How can you mine Bitcoin? Mining Bitcoin involves using specialized hardware and software to validate transactions on the blockchain and earn new Bitcoin as a reward. Here are the basic steps to start mining Bitcoin. Get a Bitcoin wallet. You will need a wallet to store your earnings. Many wallets are available online, so research and choose one that fits your needs. Choose your mining hardware. To mine Bitcoin, you will need specialized mining hardware, such as an ASIC application-specific integrated circuit miner. These machines are specifically designed to solve the complex mathematical puzzles required for mining Bitcoin. Download mining software. Once you have your hardware, you must download mining software to connect it to the Bitcoin network. Many mining software options are available, so choose one compatible with your hardware and operating system. Join a mining pool. Mining Bitcoin alone can be difficult, so many miners choose to join a mining pool. In a mining pool, multiple miners combine their computing power to solve puzzles and earn rewards. The rewards are then distributed based on each miner's contribution to the pool. Start mining. Once you have everything set up, you can start mining Bitcoin by running your mining software and connecting it to your mining pool. The software will automatically start solving puzzles and earning rewards for you. Mining Bitcoin can be a complex and challenging process. Still, earning new Bitcoin and participating in the ecosystem can be rewarding with the right equipment and resources. How can you own Bitcoin? Wallets. To own Bitcoin, you first need a Bitcoin wallet. A wallet is a digital application or physical device that stores your private keys used to access your Bitcoin and make transactions on the blockchain. There are several types of Bitcoin wallets, including software wallets. These are digital wallets you can download and install on your computer or mobile device. Examples include Exodus, Mycelium, and Electrum. Hardware wallets are physical devices that store your private keys offline, making them more secure. Examples include Trezor, Ledger, and KeepKey. Paper wallets are physical copies of your private keys printed on paper. They are a simple and secure way to store Bitcoin offline that can be vulnerable to damage or loss. Once you have a Bitcoin wallet, you can purchase it from a cryptocurrency exchange or other individuals selling it. You can also earn Bitcoin by accepting it as a payment for goods or services or mining it yourself. When you purchase or receive Bitcoin, it will be stored in your wallet and can be accessed using your private keys. You can then use your Bitcoin to make purchases, send payments to other users, or hold as an investment. Use cases of Bitcoin: pros, cons. Bitcoin has several use cases you should know. On the positive side, Bitcoin is decentralized, meaning it operates independently of any central authority or government, which makes it resistant to censorship and manipulation. Additionally, Bitcoin transactions are secured by cryptography and the blockchain, making them highly resistant to fraud and hacking. Compared to traditional financial systems, Bitcoin transactions are fast and relatively cheap. Moreover, Bitcoin is a global currency that can be used by anyone with an internet connection, making it ideal for cross-border transactions and remittances. Finally, Bitcoin has proven to be a highly volatile but potentially lucrative investment opportunity for those willing to take risks. However, Bitcoin also has its downsides. First and foremost, Bitcoin prices can fluctuate rapidly and dramatically, making it a risky investment and a volatile currency. Furthermore, Bitcoin is still not widely accepted as a form of payment, making it difficult to use in everyday transactions. Once a Bitcoin transaction is confirmed, it cannot be reversed, making it vulnerable to fraud and theft. Additionally, Bitcoin mining and transaction consume significant energy, which can have negative environmental impacts. Finally, the legality and regulation of Bitcoin still need to be determined in many jurisdictions, creating uncertainty and risk for users. How can you make money with Bitcoin? There are several ways to profit from Bitcoin potentially. Buying and holding. One of the most popular ways to make money with Bitcoin is to buy and hold it as long-term investment. The idea is that the value of Bitcoin will increase over time and you can sell it at a profit in the future. Trading. Another way to make money with Bitcoin is to trade it like a stock or a currency. This involves buying Bitcoin at a low price and selling it at a higher price to make a profit. However, Trading requires much knowledge and experience as the cryptocurrency market is highly volatile and unpredictable. Mining. You can also make money with Bitcoin by mining it. This involves using powerful computers to solve complex mathematical problems and verify Bitcoin transactions. In exchange for their efforts, miners receive newly minted Bitcoins as a reward, accepting Bitcoin as payment. If you run a business, you can also accept Bitcoin as a payment for goods or services. This is a good way to attract tech-savvy customers and earn more revenue. However, it's important to remember that Bitcoin is a highly volatile asset and there are risks involved in any investment. It's important to research, assess your risk tolerance, and make informed decisions before investing in Bitcoin. Understanding bull runs. A bull run in the cryptocurrency market is when prices rise rapidly and consistently. Think of it as like a wave of optimism sweeping through the market as more and more investors become confident that prices will continue to rise. During a bull run, there can be a surge in investor interest and demand, leading to even more price increases. Bull runs can be very exciting for investors as they present opportunities to make significant gains. However, they can also be risky. After all, when prices are rising rapidly, there's also the chance that a sharp correction or crash could occur, potentially leading to significant losses for investors who bought in at high prices. Factors announcing a new crypto bull run. Crypto bull runs can be exciting and lucrative for investors. But what exactly causes them? Well, there are several factors at play. One is demand and supply, where investors and traders' interest in crypto can surge demand, driving up prices. Market news sentiment is another factor, with positive announcements and new projects often drawing investors' attention and driving up asset prices. Institutional adoption can also have a significant impact as it signals the growing utility of cryptocurrency and can encourage retail users to adopt it. Economic and political factors are also important, as economic development and political stability can increase cryptocurrency adoption and financial inclusion. Additionally, the scarcity of alternative investments can lead investors to seek out higher volatility, high-return assets like crypto during uncertain times, further driving up prices. Inflation and interest rates can also play a role, as higher interest rates make it easier for investors to invest in speculative and riskier assets like high-liquidity cryptocurrencies. Overall, there are various reasons why a crypto bull run may occur, and it's often an accumulation of factors that trigger it. While it can be challenging to predict exactly when a bull run will happen, keeping an eye on these factors can help investors make more informed decisions. When is the next crypto run? As with any market, it is challenging to predict the exact timing of the next crypto bull run. However, experts in the industry have shared their analyses and predictions based on historical trends and current market conditions. Peter Brandt suggests that, based on past trends, the rocket's next stage for Bitcoin could begin in May 2024. On the other hand, Anthony Scaramucci predicts a recovery year for Bitcoin in 2023 and a potential trading range of $50,000 to $100,000 within 2 to 3 years. Despite the predictions, Scaramucci emphasizes the difficulty in predicting short-term market movements and remains bullish on the overall potential of the crypto market. Is it good to invest before the bull run? The decision to invest in cryptocurrency or any other asset when it is undervalued or wait for a bull market is a personal choice that depends on an individual's risk appetite and investment goals. However, using on-chain data could provide insights into the crypto market's direction. For instance, Bitcoin's on-chain data shows that the current market condition has an uncanny resemblance trend with the last 2 market cycles. Bitcoin marked its bottom in November 2022, trading at around $15,500 per token. Network value to transaction ratio, NVT, blockchain daily transactions, hash rate, wallet addresses, and MVRV, market value to realized value, are some of the the on-chain data metrics that can provide insight into whether the digital asset is over or undervalued. However, on-chain data alone may be insufficient to confirm a bull run. Cross-referencing with market sentiment and other external factors such as the macroeconomy could play a significant role. Factors like consumer price inflation and employment numbers improving could boost investors' confidence in their investment, eventually leading to a bull run. As we come to the end of this video, we hope that you found the information and insights shared useful and informative. Whether you're looking to invest in cryptocurrency or learn more about the world around you, we hope this content has provided you with valuable knowledge and inspiration. Thank you for watching. Don't forget to hit that like button and subscribe to our channel. We look forward to sharing more exciting content with you in the future.